Hello everyone and welcome to this week and in fact first week of Beta Dynamics Research Brief. As you know, every week we publish a scientific market intelligence report designed to bridge academic research and practical market analysis. In fact, our objective is not simply to explain what happened, but we focus on to understand why it happened, how market stress propagates through the system, and what it may reveal about the Bitcoin's evolving market structure. In fact, using an event study perspective inspired by volatility, spillover research, and market regime analysis, we examine Bitcoin's sharp decline during the June 2026 and assess the broader implications for investors, traders, and risk managers. But before starting, the information presented in this video and all of this channel video is provided solely for educational, research, and informational purposes. It reflects market observations, analytical interpretations, and academic perspectives based on publicly available information at the time of publication. Nothing in this content should be interpreted as a financial advice, investment advice, trading advice, legal advice, or a recommendation to buy, sell, or hold any financial assets, including Bitcoin or other digital assets. Please don't forget, financial markets involve substantial risk, and past performance does not guarantee future results. Cryptocurrency markets are particularly volatile and may experience significant price fluctuation that could result in partial or complete loss of capital. Okay, let's continue it together or today report about the Bitcoin happening. So Bitcoin experienced one of its sharpest decline in recent years, falling nearly 15% within the matter of days. At first glance, the event may appear similar to previous Bitcoin corrections. However, a deeper analysis suggests that this sell-off reflects changing market environment. Historically, major Bitcoin declines were often associated with exchange failure, regulatory uncertainty, or retail speculations. In contrast, the June 2026 episodes appear increasingly linked to institutional capital flows and leverage conditions and broader financial market dynamics, and these distinctions may represent an important steps in Bitcoin's evolutions as institutional assets classes. So let's look with together what happened. Several independent pressures emerged simultaneously, and Bitcoin ETFs recorded more than 13 consecutive sessions of net outflows, indicating weakening institutional demand. So strategy reduces part of Bitcoin holding, although the size of the transactions was limited and its symbolic significance attracted considerable market attentions. At the same time, leverage positions were liquidated as Bitcoin broke key support levels and amplifying downside pressures through the automated market mechanisms. Meanwhile, investors face increasingly macroeconomic uncertainty associated with inflation concerns, geopolitical tensions, and interest rate expectations. In parallel, capital appeared to rotate toward alternative investment themes, particularly artificial intelligence and technology related sectors. Individually, each factors may have had only a moderate impact, so collectively they created a powerful market stress environment with together's impact. Continue your journey with the hidden market mechanisms. As you know, one of the central findings of financial contagion research is that major market events rarely emerge from the single triggers. Instead, they develop through a sequence of interconnected mechanisms. And in this case, institutional outflows, weakened market confidence, and confidence deteriorations contribute to reassessment of market expectations. Support levels fails, leverage liquidations accelerated, and market liquidity weakened. So the combined effects produce a rapid decline in Bitcoin prices, From the systemic perspective, this represents a classic amplification process in which multiple shocks reinforce one another through feedback loops, and understanding this transmission generally is often more valuable than focusing on just individual headlines. So, in the next steps, the June 2026 sell-offs provides important evidence regarding Bitcoin's evolving market structure. The event suggests that Bitcoin is increasingly influenced by institutional capital flows, derivative market leverage, macro financial conditions, and cross asset liquidity allocations. And this observation is consistent with a growing body of academic and industry research indicating that Bitcoin is becoming progressively integrated into the broader financial system. As institutional participation expands, Bitcoin's behavior may increasingly reflect the same liquidity cycles and risk management dynamic observed in traditional financial markets. For investors, this means that monitoring capital flows and market structures may become as important as monitoring price alone, and it is important to consider this monitoring price generally. So, from research to market intelligence parts, the objectives of us at Beta Dynamics is to bridge academic research and real-world market intelligence, and the analytical framework used in today's reports draws inspiration from our peer-reviewed research published in Applied Economics journals. The title is The US Dollar Volatility Spillovers and Competitive Effects on Bitcoin Return Dynamics and Mining Behavior. This study examines how macro financial shocks propagate through Bitcoin market using volatility spillover analysis, event study methodology, and strategic behavioral modeling. And readers interested in the broader theoretical and empirical foundation behind today's analysis are encouraged to explore both the academic publications and the full event study article available through Beta Dynamic Research and Insights part in the websites. So finally, thank you so much for joining this week's research brief. And for the complete articles and future weekly research updates, please visit betagdynamics.com and where academic rigors meets market intelligence in the websites. Thank you very much for your attention for this week's scientific video, and see you in the next week.